Robert Kiyosaki, the author of Rich Dad, Poor Dad, has issued a grim warning to investors, saying they must preserve their capital from an oncoming economic disaster. Kiyosaki advises his 2.1 million Twitter followers that investors may protect their wealth during an economic downturn by stockpiling gold, silver, and Bitcoin. He also encourages his followers to generate revenue through business enterprises. Gold, silver, Bitcoin may protect your wealth, but not your income. An economy crashes, stock markets go bust, pensions crash, and unemployment rises. A side hustle may provide you income. Who knows, your side hustle may grow into the next Amazon or Bitcoin. Take care, be aware. The well-known author had offered a similar warning, claiming that people were not analyzing the bigger economic picture. He also mentioned that silver is a good investment in October, with prices hovering below $20. Welcome to Crypto Inquiry, where we are dedicated to providing you, the investor, and the crypto curious with factual information and topics. Our goal is to keep you informed to make educated and timely decisions and remove the fog of hidden information. Nothing is meant as financial advice, and always do your own research before investing. Here we are building a community to help each other stay informed and make the most of our financial gains. Binance invests in Bitcoin mining. The Bitcoin mining sector has expanded dramatically in recent years. With many bull markets thus far, those that have taken this road have made a high profit margin, with corporations generating hundreds of millions of dollars from their activities. The bear market has had a significant influence on the Bitcoin mining business, but it has not deterred participation, and Binance is now extending assistance to miners. $500 million for Bitcoin mining. Binance announced the creation of a $500 million pool for Bitcoin miners. It offers a line of credit of up to $500 million to miners seeking finance for their mining activities. The crypto exchange stated that this was in an attempt to help maintain a healthy digital asset system. This fund is being launched at a time when the crypto mining sector is under strain due to rising production costs, which are reducing profit margins. Many Bitcoin miners are in danger of going bankrupt and being forced to cease their operations. The Binance Fund's loans will be subject to terms and conditions such as interest rates ranging from 5 to 10% and a duration of 18 to 24 months. Borrowers will also be required to furnish collateral for the loans. Binance is also searching for cloud mining suppliers to collaborate with. This is consistent with the crypto exchange's stated ambitions to introduce cloud mining solutions. Mining becomes harder. Bitcoin miners are now dealing with more than just falling market prices. Given how profitable the market may be, more competitors have entered the area, making it more difficult to manage viable mining operations. The introduction of new mining rigs into the market has significantly raised the hash rate and, as a result, the difficulty. The Bitcoin network has had its highest difficulty change for the year 2022 earlier this week when it jumped by 13.5%. This means that mining a single block now needs a larger hash rate. Miners will now have to improve their hash rate to maintain a competitive edge, and loans such as those granted by the Binance Fund will assist miners in keeping their operations running. The loans will also not be limited to a certain group, since both public and private Bitcoin miners, as well as digital asset infrastructure firms, will be eligible. Public companies are betting on blockchain adoption. Businesses can no longer disregard blockchain technology, and some have already begun to take the lead in incorporating it into their operations. The world's top firms are presently betting on the big market. As per a new survey, a sizable portion of the top 100 nations is already utilizing blockchain technology. Top companies using blockchain technology. The top 100 nations in the world have a combined market capitalization of billions of dollars. They span from tech powerhouses to social media giants. But one thing these firms have in common is their willingness to adopt new technologies to grow their operations. According to new block data research, a considerable number of these major corporations have thrown their hats into the ring using blockchain technology. A total of 44 of the top 100 corporations from 6 key industries have already begun to integrate crypto and blockchain technology into various aspects of their operations. Naturally, technology businesses have been at the vanguard of this integration, but media and telecommunications corporations have not been far behind. The 3 industries accounted for 36% of the top blockchain-using enterprises. Consumer and retail, as well as basic materials and industrials, were close behind at 20% each. Following it came the financials, which had seen an 11% increase in utilization. Energy and utilities accounted for 9%, while healthcare accounted for only 2%. Meta, MasterCard, Visa, and others have been prominent in the field for various integrations. Meta has launched a function that allows users to submit NFTs on its Facebook and Instagram sites. It's also working on an open-ended metaverse. Crypto payments have grown in popularity as MasterCard and Visa announced numerous collaborations to enable consumers to purchase with their cryptocurrency. For example, Crypto.com members may utilize their Visa cards to spend their crypto balances on the exchange. Although blockchain technology appears to be most popular among payment businesses, it has also demonstrated solid use instances in supply chain management, identity, verification, and a variety of other areas. As a result, despite several governments throughout the world attempting to regulate space, firms have continued to integrate it. According to the survey, 86 of the top 100 organizations are actively investigating blockchain-related solutions for their needs, while 44 have been employing blockchain technology since 2021. XRP Court updates. Jeremy Hogan, a cryptocurrency legal expert, anticipates that the Securities and Exchange Commission, or SEC, will not challenge the judge's ruling requiring the SEC to produce contested material in its case against blockchain-based payments provider Ripple Labs. Hogan, a supporter of Ripple, informs his 232,400 Twitter followers that on September 29th, U.S. District Court Judge Annalisa Torres overturned the SEC's objections to giving up emails received by William Hinman, the former SEC Corporation Finance Division Director. However, the XRP-friendly attorney points out that Judge Torres did not specify when the SEC must give over the material. In this case, Hogan claims that the SEC has at least 2 months to comply. The deadline becomes when an appeal of the judge's ruling is due. The court is lenient like this because once the documents are handed over, they can't be undone. So that deadline is basically 60 days, maybe longer if they move for reconsideration, which I doubt they do. Top banks allow crypto transactions. Crypto assets are benefiting from the United Kingdom government's permissive position on digital currency ownership, usage, and trade. In contrast to nations such as Algeria, Bangladesh, Bolivia, Egypt, Indonesia, and Ghana, where virtual currency is prohibited, the United Kingdom has kept the door open for the volatile asset class. The study's findings are pertinent since the United Kingdom is presently striving to create a crypto regulatory framework to make the country a digital asset hotspot. Most significantly, the number of investors who have joined the market through Bitcoin exchanges has increased in the country. Businesses that deal with digital tokens must now register with the Financial Conduct Authority and get authorization. This is primarily to ensure that anti-money laundering requirements are carefully adhered to and implemented by organizations dealing with various asset kinds. Banks in the nation appear to be accepting of virtual currencies since the majority of them let their clients transact with exchange platforms. A recent study involving 17 major banks in the United Kingdom discovered that just 47% of the participating financial institutions do not have rules that allow their clients to engage with platforms such as cryptocurrency exchanges. In particular, 7 of the questioned institutions, including Halifax, HSBC, TSB, and the Cooperative Bank, cited security concerns in restricting the use of their credit and debit cards for transfers or transactions made on cryptocurrency exchange platforms. The vast majority, 53% of these British financial institutions, came out on the other side of the equation, with only 4 of them being crypto-friendly. Except for Binance, which has been outlawed in the UK, digital-only banks such as Revolut, Monzo, and Starling are among the major lenders that enable users to make transfers and withdrawals via exchanges. Crypto adoption in the UK. With this move involving big institutions in the country, improved levels of Bitcoin acceptance may be on the horizon for the UK, which now ranks 22nd out of 26 countries in that category. According to the most recent Finder statistics, 4.1 million Britons possess digital currency, with 33% owning Bitcoin, the largest digital currency in terms of market valuation. It is no longer surprising that Bitcoin, despite its struggles to recapture greater trade values, remains the leader in the virtual fiat industry. The UK's crypto ownership rate of 8% is much lower than the worldwide average of 15%. With 29% ownership, India leads the race in this sector. Elon Musk deletes crypto tweets. Is something coming? Elon Musk, the CEO of Tesla and soon-to-be Twitter owner, deleted multiple tweets that disclosed his plans for the dog-themed cryptocurrency Doge, a potential proposal that could have taken Dogecoin to the moon. The internet always saves a duplicate of everything, even if you delete a post or tweet on the spur of the moment. Earlier this month, Musk tweeted something that may have influenced Doge and Twitter, but he may have later altered his mind and removed it. Largest bank says Bitcoin is unique. DBS, Southeast Asia's largest bank, has some thoughts on Bitcoin and other cryptocurrencies. Digitized cryptocurrency trading was just recently made available to the company's high-rolling clientele. DBS Digital Exchange is a Bitcoin trading platform for companies and other organizations interested in entering the market. At the moment, you can only buy and sell BTC, BCH, ETH, and XRP on this exchange. But this isn't the only reason DBS is bullish on digital money. That's a wrap for this video. Let us know in the comments below if you think Binance investing in Bitcoin is good news. If you enjoyed this video, give this a big thumbs up, and don't forget to subscribe to our channel if you want to see more videos like these. See you next time.